Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of US GoldMining, an exploration and development company focused on advancing the 100% owned Whistler Gold Copper Project in Alaska. It's Tim Smith. Great to have you on the show.
Hi, Jesse. Thanks so much for having me on. Great to be here.
Yes, pleasure to have you. It's been a long time since we have had a chat. So I want to start off by asking, what are the main themes and trends you're currently watching in the gold sector that you think more investors should be paying attention to?
Yeah, well, obviously the elephant in the room there is the gold price, right? I mean, we've seen an amazing record bull run for gold since, at least as early as 2024. I think we're starting to see that price build a very solid base above 3,000 now, which is really very pleasing for the sector. I think there's some commentators out there. I saw a report recently. Bank of America was saying that perhaps it's plateauing. But then there's plenty of other market watchers that are predicting even higher prices. I just read a report the other day from Goldman Sachs that said they're predicting 3,700 ounces by the end of 2025. So they're obviously continuing to see those fundamentals build in terms of the major factors around supporting a thesis for a higher gold price. There's a few different things you can pick on there. I mean, there are actually a vast array of things impacting gold price right now. But maybe I'll just go over a couple of them. Central bank demand is a theme that we've been seeing building for a few years now. I think 2024, it's reported, was the third consecutive year of record purchases, certainly well exceeding 1,000 tons by the central banks of gold bullion. Unfortunately, geopolitical risk is it just seems to be here to stay right now in these so-called, unprecedented times. Gold's appeal as a safe haven asset has continued to intensify. The Middle East, Russia, Ukraine. Recently you can add India, Pakistan. Unfortunately, these things seem to be growing and intensifying, despite international efforts to the contrary. And then, just looking at interest rates and monetary policy. Wow, what a fascinating start to the year for anyone interested in economics, and I think we all are, because we all have our investment portfolios. Inflation's certainly been coming down, which is great, but there are certainly pressures still on it. I think it's good to see it in the low sort of 2.3% range in the States recently. Canada just came down. I think it's just below 2% now, although that's largely because of political decisions made with the incoming new prime minister there, removing the carbon tax. So, I think core inflation is still generally up in Canada, but I think the prospect of lower real rates is certainly bullish for gold. But then when you think about monetary policy, what's happening there with respect to the trade wars, these tariffs, on again, off again tariffs seem to be pumping the market. When they're on, gold is up. People are concerned about trade and the economy, so we're seeing that safe haven demand for gold. When the reverse of that happens, for example, when the trade war recently between China and the United States softened a little bit, we saw US equities markets rise and gold came back down. But I think more often than not, the trend lately has been risk-off markets. And you can add to that some very recent events just in the past week. As we're speaking here in the middle of May, with Moody's downgrading the US credit rating. And once again, we've seen that spur increased demand and pushing gold prices back up. Potentially heading back towards those sort of recent record highs that we saw in April of around $3,500 per ounce.
Excellent summary. Gold has been vastly outperforming the rest of the commodities complex, showing that it is in a league of its own and perhaps being viewed more as money than as a commodity by market participants. Would you agree with that outlook? And if so, what are the factors that you think cause this disconnect to the upside for gold compared to the rest of the metals?
Yeah, well, it's disconnected to other commodities. It seems simple because it's not like other commodities. But think about that for a minute. Most other commodities are consumed in some way. We either build something or we convert into energy, for example. As a society, somewhat ironically, given the vast effort we go to dig gold out of the ground, by and large, we rebury it in vaults as a store of long-term value that underpins our monetary systems. And you might argue philosophically, why place value in something that you don't consume or convert? But gold seems to hold a very special place historically, and that's, I think, precisely because it has always been a currency rather than a commodity. And particularly when we have these periods of economic uncertainty, social and political uncertainty, financial uncertainty, and instability. When, as a society, we worry about the uncertainty of the value prescribed to fiat currency, then we tend to revert back to gold. And I think it's because of its unique properties that it continues to hold that intrinsic store of value as a safe haven. Historically, gold as a form of currency and a store of value, it obviously predates fiat currencies, and over the course of history, those fiat currencies obviously come and go. And really, gold, if you think about it, is one of the oldest forms of currency, and I think the reason for that is because of those remarkable physical properties. It's not just because of its beauty, but it's the only metal you can bury for thousands of years. It doesn't oxidize, so when you dig it up after 5,000 years, it's still gold. It still holds its value. It's remarkable.
We're seeing inflows into Chinese gold ETFs at record levels. And in the meantime, of course, the Chinese government, as well as citizens, have been purchasing physical gold like there's no tomorrow. How much do you expect China to continue to play a role in the gold market up ahead?
Yeah, it's interesting. Doing some research into this recently, it's certainly clear that China has a major desire for gold in the reports that we're seeing. We see this obviously in their official economic policy. Like many other central banks, the Chinese central banks are steadily increasing their gold reserves. But also apparently culturally, what we're hearing, what we're reading is that Chinese citizens are reportedly investing in gold, not just retail sales in the form of traditional gold products like jewelry, but they're also purchasing gold bars and coins apparently, as a means of investment. I think having been in the gold industry now for 30 years, for many years, we always heard about a seasonal demand in India. Gold retail sales have always been in India have always been a major factor in gold demand, and that's the drivers there are of course vast population, but also that cultural importance around wearing their wealth. And now China, another country with a population in excess of 1 billion people, so it has that vast population, but now we're seeing this new wealth emerge in the middle class. And so, yes, I do see China continuing to be a significant player for global demand in the foreseeable future.
COMEX Gold Deliveries have also exploded so far in 2025, meaning more buyers are standing for delivery. What does this tell you about the gold market and the overall economy?
Yeah, well, I think it harks back, that dramatic increase in COMEX Gold Deliveries so far. I think it harks back to that significant shift towards wanting to own physical gold that we just spoke about. We see it in China, but we're seeing it globally right now. I think it just really underpins this deep-seated anxiety in the market and in the investment community. This need to own gold, to hold it, to keep it as a hedge against all possible eventualities with respect to our other investments, and again, these so-called unprecedented times are really creating the environment, the atmosphere for that anxiety. So there's an additional compelling emotive factor, I think, in addition to the economic fundamentals around having some gold in our investment portfolio. But I think more specifically that surge is really exacerbated more recently by the US tariff threat, and the possibility that tariffs could come on imported gold, and I think that's really creating that strong demand for traders to move physical gold into COMEX warehouses before those tariffs are potentially implemented.
So despite all the bullishness for the gold sector, the gold miners have, for the most part, lagged behind the performance of gold itself, at least if we're comparing historically to previous gold bull markets. Are you seeing any signs that this is changing, and what do you think it will really take for the gold mining sector to kick into high gear?
Short answer, yes. I think we're seeing signs that this is changing, but certainly this overall topic, this has been a theme. At every conference I've been to over the last couple of years, and these are gold mining exploration, both technical trade conferences and investor conferences. The talk has been around the disconnect between this gold bull market that we're enjoying and the lagging equities in the mining exploration development group of companies. Maybe it's a question of investors focusing more on ETFs and physical gold rather than the equities, as we just discussed. But is it also that the miners have been failing to deliver on the returns that they once did, compared to some of those previous bull markets? Or is it a combination? And I think it's probably a combination. But, I think my area obviously is exploration and mining. And mining has always been risky, and exploration, I'm an explorationist, I'm a geologist, is certainly, orders of magnitude even more so in terms of the risk. Obviously, the rewards are very high, but there's no guarantee that exploration will deliver a new discovery. And both mining and exploration are certainly becoming more challenging as our sector is tending over the course of time to move into more remote environments to try to make lower grade deposits work, to mine at deeper depths, for example. But a need for metal is not going to go away anytime soon, and so if mining can't deliver as quickly, then certainly prices will continue to rise, and that in turn will make those mines profitable and sustain the industry. And there's a few examples or factors, I guess, we could talk about that have contributed to the underperformance of the mining sector for investors. And I think increasing costs has been one of the really big trends. Those operational challenges have always been there, will always be there, but costs have been keeping up with gold price for the longest time, until perhaps I think the last year. We certainly see inflationary pressures having a big impact on the mining industry, as it does on any industry for equipment and consumables. There's always those operational risks around things like permitting uncertainty. And we obviously, just discussed a minute ago that the fact that it's getting harder to discover and develop new mines. But I think there are some indications that the miners' lagging performance over the past, say, 10 years might be starting to change. And that's for a couple of reasons. One, I think miners by necessity have got better. I worked for Goldcorp and Newmont for 6 years. It was a fascinating experience to see how the machinery in those big company works. And I think the miners have become very disciplined in controlling their costs. As I say, by necessity, they've had to survive. They've certainly improved their standards around the mine studies, the detail of the data, and the rigor into those studies. Project approval processes have gotten a lot tighter. They're finding operational efficiencies in existing operations. They're looking to remove debt from their balance sheets, et cetera, et cetera. We could go on. But I think, we're starting over the last few quarters to see some really promising signs. And, I mentioned I work for Newmont, so I obviously watch Newmont pretty close still. And it was really pleasing to see them actually report in the first quarter of 2025, record free cash flow of $1.2 billion. Now, that was possibly inflated a little bit by the sale of some of their assets. So they're also, I think, consolidating their asset base a little bit. But they're looking to get set up for the long term here. and to build out their long-term development portfolio. We're perhaps not quite seeing record profits yet, because I get the sense that a lot of the miners are taking this opportunity with very high spot prices to just shore up their mines and their business. They're completing capital projects. They're undertaking, mining efficiency and processing efficiency projects. But those very healthy free cash flows, I think, are going to convert to profits and returns to shareholders. And we think that will underpin a resurgence of interest in the sector. Now, one graph I saw recently was very simple. It just showed gold price and all-in sustaining cost, and they're separating in a positive way. That gap, that delta, really, to me, says profit. It says free cash flow is starting to build in the majors. They're starting to build a war chest, if you like. So there's a couple of, I think, situations where investors can benefit from the situation in the near-term future here, and medium and longer term. And one is that as those profits build, that will be returned to shareholders in the form of dividends, for example. And we're hoping to see premium dividends starting to come back to attract investors back into the gold equities. But I think also, and this is where it really is an area that we watch at US GoldMining, those miners are starting to build a war chest, as I mentioned earlier, and they're going to need to start acquiring companies and projects for the development portfolio. In other words, they have to replace their depletion. When they're mining their reserves, they're depleting their resources and reserves base. The miners are not typically exploring and adding resources and reserves back into their portfolio, so they need to go acquire in order to sustain their long-term mining production rates. And I think companies like US GoldMining Inc. can benefit from that, because we have a project which we think is of interest to the majors and mid-tiers in terms of wanting and needing to own projects like Whistler within their long-term development portfolio.
Well, that's a perfect segue into discussing US gold mining and how you fit into the picture when it comes to the gold markets. It's been a while since I last had you on the show, so maybe you could start by giving an overview of the company for those new viewers.
Yeah, absolutely. Okay, so US GoldMining Inc. Is a relatively newly listed company on NASDAQ. We IPO'd in 2023, so we're just about 2 years old. We're just over 2 years old. We own the Whistler gold copper project located in Alaska. It's 100 miles northwest of the main population center of Anchorage. And so it's actually the closest large undeveloped gold copper deposit in Alaska to that main population center of Anchorage. And it's big. It contains 6.5 million gold equivalent ounces in the indicated classification, and another 4.2 million gold equivalent ounces. We tend to talk about gold equivalency. It's a gold, copper, silver deposit. About 60 to 70% of the value was in gold, and most of the remaining sort of 30 to 40% is in copper, but there's also some silver. So it is largely a big gold deposit, but it also has 1 billion pounds of copper, and that really is of interest, I think, to many people in terms of the need to develop a resource security for critical metals such as copper. It's on state land, which is a key differentiator, we think, and the state wants to build a road out to us from Anchorage. That was a really major catalyst for us in terms of creating the company and attracting the initial investment. And we think that's going to have a big impact on our potential future mine development, the fact that the state wants to build that road. And we've just actually recently announced that we're commencing the process of embarking upon the first ever mining scoping study for Whistler. It will be a preliminary economic assessment, or sometimes also known as an initial economic assessment. So that will be the first opportunity to really frame what a future mine would look like, and what the economics and some of those key metrics around things like NPV and rate of return, payback period, and life of mine will look like. So we're excited for that, but we also want to stress that there's lots of exploration upside to continue to make Whistler bigger.
Well, you recently released an update on exploration targets at the Whistler Gold Copper project. Can you walk us through those details and what they mean for the company moving forward?
Yeah, absolutely. We strongly believe in the exploration potential of the project. Yes, we're embarking on a mine scoping study, but in parallel to that, we still very strongly believe that it's largely an exploration play. We've certainly got the base case resources with that, 6.5 million ounces gold equivalent indicated and 4 and inferred to go ahead with mine development studies. But in parallel, we believe we can make it bigger. So we're excited about continuing to unlock that growth story via exploration. So we put out some news recently, and we think we're going to look at bringing some more news out just to really continue to take a deeper dive and describe some more of that exploration potential in the coming weeks and months now. The recent news really just provided a very high-level reminder that Whistler is still very much an exploration project, and in particular, we see it as a district-scale play. We've coined the phrase the West Susitna Mineral District, and ourselves and some other explorers developing nearby. We're really looking at a district here that could have around 20, perhaps 30 million gold equivalent ounces with what we currently have on the books collectively, and with future exploration success. And as I say, it's located very handily, very nearby, just 100 miles away from Anchorage. So within that district scale play on our land holdings, and we have 54,000 acres and round numbers of 100% owned state of Alaska mining claims. It's a nice big property, and within that we have 3 mineral systems. Now, a mineral system is really a geologic phrase. It just describes a big area, say about the size of a city, that has the geologic potential to host future discoveries. And in our case, we already have actually 3 resources in 2 of those mineral districts. So in the north, we have the Whistler Raintree Mineral District. It already contains the namesake Whistler deposit and also the Raintree deposit. So that's about 3/4 of the overall resource inventory that we have at Whistler in that one mineral system. What really excites us about that particular area is that we think it's a classic porphyry cluster. In other words, there's evidence geophysically, geochemically, and geologically that there are multiple porphyry intrusive centers. We've drilled and developed resources on 2. We think there's a lot of upside for more exploration success there. And then in the southern part of the property, we have the Island Mountain system. Again, the Island Mountain deposit sits within that, around 2 million ounces, just under about 1.8 million ounces of gold inferred. But again, more geophysical, geochemical targets that need more drilling to continue to grow that resource. And finally, the Muddy Creek mineral system, which is a big geochemical footprint that has the sort of signature similar to, say, Fort Knox, which is Kinross's mine near Fairbanks, or Snowline's Valley deposit in Yukon. So these are big geologic systems that have potential to deliver additional discoveries in future. And as I say, I'm by training at heart and by experience, by and large, mainly an explorationist. I'm an exploration geologist. So I can tell you, Jesse, I feel really excited about the Whistler growth potential.
Let's turn for a moment to the executive order that was signed back in March by the Trump administration titled Immediate Measures to Increase American Mineral Production. This is a bid to fast-track important mining projects and encourage domestic production of vital resources. How could this favorable environment for mining potentially make an impact at US GoldMining?
Yeah, amazing policy tailwinds for exploration and mining right now. What a breath of fresh air. At both the state and the federal level, it's really aligning beautifully for us. And by the way, in addition to the executive order you just mentioned, there was another one actually on President Trump's first day in office, one of the many executive orders he signed, and that was actually specific to Alaska, unleashing Alaska's extraordinary resource potential. And so the second executive order signed in April, which you mentioned there, it starts to set up the framework around directing how to specifically direct government agencies towards immediate action to facilitate domestic mineral production. And really pleasingly, we always hear about critical metals, but copper and gold are now starting to be added to that because of the significant impact. Obviously, copper can have as an energy transition metal, but gold in particular, in terms of just unlocking the country's resource wealth, natural resource wealth. We've often differentiated Whistler from many of the other projects that are located on federal lands because Whistler's on state lands, and we don't see quite the same potential impact for federal overreach. But now that President Trump is really reversing that federal overreach, and not only is he doing that, he clearly wants to stimulate mine development in the United States as part of this broader nation building initiative, and to secure the US has resource security going forwards. This can only be beneficial for Whistler and US GoldMining. And it really just gels very, very well with state policies. And Governor Dunleavy in the state of Alaska and President Trump are great friends. For a while there, it looked like President Trump was actually going to tap Governor Dunleavy on the shoulder for the position of Secretary of Department of the Interior. Kind of glad that Doug Burgum got the job because we wanted to keep Dunleavy in Alaska. He's very good for resource development and for us. But it's great to see the state and the feds working together. And I think the best example that will have the biggest impact for us is that state-sponsored West Susitna Access Road. I touched on that briefly a few minutes ago. And this is where the state is working on the design and the permitting of a road that will connect Whistler with a highway, grid power, port, rail, and of course a big working population in that Anchorage district. So we're very excited and supportive and keen to continue to work and partner with both states and federal agencies towards unlocking resource potential for Alaska and for our shareholders at US GoldMining.
Well, talk to us about some of the upcoming catalysts that investors can look forward to when it comes to US GoldMining, upcoming news flow, any sort of significant drivers that you see for the company up ahead.
Yeah, so obviously a major milestone in 2025 will be the delivery of the first ever mine scoping study with, combined with the economic evaluation for Whistler. We think that it will deliver a significant revaluation of the Whistler asset and the company, and we're planning to deliver by year end on that study, and there will be some more news coming out around that. And in particular, there will be milestones along the way, progress reports such as metallurgical recovery data, possibly some updates from those state agencies working on the road, for example. And these are all going to be, important metrics that will ultimately feed into and help build up that the economic picture. And we think it will be a very compelling project that we will be able to introduce to the investment community in one of the best mining jurisdictions, and in the United States, I might add, in Alaska, by year end. And as we spoke about a few minutes ago, we have an abundance of exploration upside. So while our focus is certainly to do what we said we would do. So going back 2 years ago when we IPO'd, we said that our use of proceeds would be 2 years of drilling and then do a preliminary economic assessment. So we've done that. The 2 years of drilling, we've grown our resources. We've seen fantastic results from drilling. World-class drill intercepts, 650 meters at 1 gram per ton gold equivalent in the core, the high-grade core of Whistler. That's a world-class drill intercept any day of the week, and really underpins the quality of this asset. And we just look forward to continuing to seize additional opportunities around exploring at the Whistler project, which we firmly believe will continue to add significant additional growth for the project and for investors in US GoldMining.
Fantastic. Well, Tim, I'll end by opening the floor to you. Is there anything we haven't yet discussed or anything you want to emphasize to potential shareholders of US GoldMining?
Oh boy, well, I think we covered a lot there, Jesse. That was fantastic. Great questions. Thank you for those. Maybe just one thing I would just remind folks that they can do their own research on our company via our website at www.usgoldmining.us. where you can download all of our technical reports and financial reports. And you can click to subscribe, etc. You can get all our news releases, and you can get in touch with our investor relations folks as well via that website, usgoldmining.us. So, Jesse, thanks so much for your time today. It's been fun.
Yes, thank you. I will put a link in the description below to the US GoldMining website, as well as social media account for people who want to follow along with the company. Tim, it's been a blast. Thank you so much for coming on the show.
Thanks again, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.